These are the top questions answered about buying a home. Is it a good time to buy a home? So real estate's very, very different than buying other things. It's not so much about getting the cheapest thing possible. Sure, every market has undervalued opportunities in it. But if you're a financed buyer out buying a home, you're a retail buyer. People who get under market values are cash buyers. That's a totally different set of variables, totally different set of buyers. We're really talking about the person who's buying a home to live in. It's not so much about timing the market. It's about time in the market. We say this saying over and over again, important enough for me to say it one more time. Real estate is not about timing the market. It's about time in the market. So instead of worrying about which market you're buying in, think about your holding period. How long do you plan on owning real estate? Because that's really what matters. Now, depending on the market you're buying in will decide how long of a time you need to hold your real estate for it to make sense. When prices are stronger, rates are stronger, then you need to hold your real estate longer than other markets where it's very cheap to buy. And it's really impossible to forecast that. I'll give you an example. In the real estate market when it crashed, people were getting insane deals on properties. But because the market was behaving the way that it was, it took a very long time for them to make money on their real estate again. They had to go through almost 2 full market cycles to even start seeing real gains on their real estate. Where when you're in more predictable markets where there's more linear increased trends, then you don't have to hold your real estate for quite as long because you don't have to go through so many market cycles. So when you're thinking about buying real estate, think about how long you're going to live in the home, how long you're going to own the property. That's really what matters. Now, in a traditional marketplace, about 3 to 5 years, you can break even on the real estate that you purchased by the time you have closing costs and so forth. Lately, in our local markets, both nationally and in our local markets, you don't have to hold it that long. We are seeing people make profits in as quick as 2 years, 3 years. It's not always about what you're paying for the property. It's about what you're making money on when it goes time to sell. Or if you're renting, how much revenue you're generating out of that property. The general advice that we have for our clients is if you're planning on living in the same place for about 5 years, then it's a great idea to pivot into owning real estate versus renting real estate. If you're living in a market for 10 years, then it's really tough to lose money on a property, especially if you don't refinance that property. One of the fastest ways I see people fail in their real estate purchases is if they take equity out of their home. Because the whole point of this holding period is to grow that equity, reduce your loan balance. And if you refinance, pull out money, then all of that progress goes backwards. So if you're worried about making money in real estate, I'll give you one of the biggest tips. It's not about when you buy, it's about don't pull equity out of your home. I hear a lot about foreclosures and looking for foreclosure lists. Now, important to understand what a foreclosure is. It's basically a person who stopped paying on their home and the bank took that back. The bank then hires a real estate agent and puts it back on the open market as a foreclosed property. Now, if you're talking about buying it on the courthouse steps, that's an entirely different world. That's actually just paying the bank direct with cash. But a lot of times the borrower owes more than the property's worth on the open market, so they never actually sell on the courthouse steps. That property is upside down. So a lot of times they never sell on the courthouse steps. Instead, they go to a real estate agent, and then that real estate agent markets the property on the open market as a foreclosed property. Now, we have lists for that too, but it's important to understand there's a very, very small percentage of the homes for sale nationally that are foreclosed properties. I'm going to give you an actual number to make my point. Right now, for all properties for sale and under contract in our market, I'm looking at my system right now, is 3,582 properties. Of those 3,500 listings, guess how many are foreclosures? 8. That's it, just 8. So that's the reason we talk about foreclosures not really being a big part of the marketplace anymore. Because of the interest rates being at 2.75 for the last 10 years, and we just had a very small period where it's been higher, people are not upside down. So even when people fall behind on their payments and they're falling on hard times, they don't have to let their properties go to foreclosure anymore. They can be delinquent 6 months, 8 months, a year, and still sell their property, get equity, pay their bank off in full, and then never actually have a foreclosure. So it's important to understand about buying foreclosed properties is we're really not in the marketplace for that anymore. People are not upside down on their properties. People have equity on their properties. That's not a recipe for foreclosures. Now, make no mistake, people can fall on hard times, fall behind on their payments, and be forced to sell their home, but they don't have to do a short sale. They don't owe more than their home is worth. They just simply have to put it on the market, delinquent, get out their cash, and then make that transition. How old should you be to buy a home? Well, legally, 18. You can buy a home at 18 and you're totally fine. But it goes back to my first comment about holding period. That is what's really important about purchasing real estate. How long are you going to own that property? If you're only going to own it for a year, owning is not for you. You should rent until you figure out where you want to start investing your real estate. Maybe you're here for college and you're going to live here for 4 years. Well, maybe you buy that property, but once you're done with college, maybe you rent it out to another college student so that your holding time is increased. So when you're thinking about how old should you be to buy property, I think people should start investing in real estate at 18 because compounding will start far sooner than if you start at 40. It's really about that holding period. So if you are going to school in Alabama and you are going to college there and you want to buy a house, great. But maybe 4 years is not the proper holding time for that real estate, but there's still massive opportunity in it. Maybe you should buy that real estate, go to college for 4 years, but then when you move out, stay a landlord, get a property manager, put another renter in there and allow that holding period to increase. That's really where the power of real estate kicks in. So it's not about how old you should be to buy a home. It's how long will you be willing to hold that piece of real estate so that the investment starts to make sense. Is it cheaper to build a house or buy a house? Now, in our market, for the last decade, it's always been cheaper to buy than build, always. You can very quickly look at that by just look at sold prices, the average square footage price of a home versus the quotes a builder is going to give you to build a home. Now, we're talking about building. We're not talking about buying a new construction home. That's very different. We're talking about buying a lot and building a custom home, right? Because you get a lot of perks building a custom home. You get to do whatever you want. You get to have every material you ever feel like. You can create anything you want with no limitations. There's a premium to be had on that. And this is nothing new. Now, the gap is getting larger and larger right now, especially in a post-COVID world with construction costs getting so expensive. We're seeing massive gaps in building costs versus purchase costs. Now, new construction homes, buying a neighborhood where a home has been built, very different. We've actually even found opportunities where it's cheaper to buy a new construction home than a resale home because of their special financing programs. Remember, there's 3 groups of homes. There's new construction homes, resale homes, and then fully custom. You buy the lot and create your own home. Those tend to be the most expensive. It's been that way for a decade. But now the gap is getting larger and larger, where it's becoming even more expensive to build than buy. Then you have new construction homes, which is where a corporation builds lots of homes at once and they have scalability. So actually, we're finding sometimes that can be cheaper than buying a resale home. And then finally, you have the resale home. And depending on your financing situation, that's a great market as well, because now you can buy in more established neighborhoods, maybe areas that there is no new construction options available. And often the resale homes are in price points that are below the new construction homes as well. Can you buy a home with no money down? Depends who you are, and it depends where you're buying. Now, if you're a veteran, the answer is absolutely yes. As a thank you for your service, the government gives you a special loan program where you don't have to purchase a house with a down payment. Then you can negotiate with the seller to help offset your closing costs so that you come in with absolutely no money. Now, for those that are not veterans, it depends on where you buy. If you buy outside of city limits, there are options available through USDA financing, the government agricultural program. They have 100% financing. Basically, you have to buy outside of city limits. There's a special map, changes all the time. You can consult with your real estate agent on which homes are eligible. For our area, it's basically everywhere outside of Sparks, outside of Reno, outside of Carson City. All the other areas are able to. Now, locally, there are down payment assistance programs for programs that require a down payment. But I always really encourage my folks to use caution because those are not free. They call them grants. They call them assistance programs, and it's implied that those are free, and they are nothing but the truth of free. They are financed by big banks here in town, and it does up your interest rate. So use caution on those because you're going to be paying a pretty hefty interest rate on those down payment assistance programs, and it often doesn't pencil. I encourage most of my folks to just take that patience to save or consider buying in other areas so that they don't have to stay in city limits and pay these premium interest rates. But there are absolutely down payment assistance programs available. Just use caution because there's this big misunderstanding that they're free. It's like free grant money. It is not. They do charge you for it. They do charge you a premium interest rate, and sometimes that makes it not pencil. Does debt consolidation affect buying a house? Absolutely, it does. Because typically with debt consolidation, you are renegotiating your debt situation, which means you're not fulfilling your obligations as agreed. So yes, it can absolutely affect your ability to buy a home. It can affect your credit rating. Remember, credit rating is everything about buying a home. It allows you to see if you can even get a loan, and it'll also decide what interest rate you get. And with debt consolidation, often you are not paying your credit card companies or other consumer debt as agreed, which means now they're going to report that. They're going to say this person did not fulfill their obligation. So credit consolidation should not be done in conjunction with buying a home. It can very much affect your ability to buy. You have to have strong credit. You have to have your consumer credit affairs completely in line to buy a home. Can you buy a home with bad credit? Well, bad credit's kind of a relative term, right? There are minimums that you need. Now, most folks who do struggle with their credit ratings use the government-backed FHA program versus a regular bank loan. The reason they do that is the government actually provides more leniency on the ability to get a loan. Now, if it's too low, you will start paying a premium on interest rates, where sometimes that makes it really tough for the purchase to pencil. Very similar to what we were talking about with the down payment assistance. The rate starts to get too high to where the payment stops to make sense. So you have to use caution, but it is possible. We had this happen a lot with folks with very large down payments. Maybe they sold a piece of real estate, but they don't have the best credit. So they can still get a loan, even though their credit's a little lower. But if you're doing like minimal down payment programs, usually lenders will advise you to improve your credit. They will provide you tasks and chores, and lenders can help with this. They can provide guided items on how to improve your credit so that you can get a lower interest rate. Because the answer is yes, you can get a loan with low credit scores, but it's about that interest rate. Sometimes it's better for you to be patient, improve your credit score so that you can get an interest rate that has a payment that makes sense for you. What is a first-time home buyer? This is a big misunderstanding that there's special programs out there for first-time home buyers. Now, there's some grant programs where absolutely the surprise, but even a first-time home buyer doesn't mean it's your first house. You can actually own a house, then rent for a while, and then get back into home ownership, and that's considered first-time home buying. But it's really important to understand that there is no like special loan program for first-time home buyers. FHA loans, VA loans, bank loans. It doesn't matter whether you've owned a house or not. There's no special perks on that. A lot of misunderstanding is that an FHA program is for first-time home buyers. It's not. People use it over and over again all the time. The reason you just find yourself hearing about first-time home buyers using an FHA loan program is because it's a low down payment program. And then typically as you buy and sell real estate, like we were just talking about with holding periods, you get enough equity that you no longer need to use that program. You can use other bank programs because you can use your home's equity that you sell to apply it towards your home purchase. So that's why it's commonly what first-time home buyers use, but people can use it over and over again. It's just once you start building wealth through the equity of real estate, then there's better loan options out there. And that's why there's a misunderstanding about FHA being a first-time home buyer program. Now, there are special grants where they qualify you as a first-time home buyer, but you don't actually have to be your first house. You can go rent for a while and they no longer consider you part of the home ownership market, and then you qualify again. It just depends on how many years you've chosen to rent. How much money do you need to buy a home? Now, I've got a couple of videos on this that goes into depth, but basically it just depends on the loan program you decide. Your lender will tell you the percentage of the purchase price that you need to buy a home. Now, for your closing costs, typically we recommend planning on anywhere between 2.5% to 5%, just depending on how the loan is negotiated. Because a lot of times sellers will offset some of your closing costs. They'll help offset your brokerage fees when you use a realtor. They'll help offset your lending costs to get a loan. So it just depends on the type of property and what you can negotiate. But typically we see folks saving anywhere between 3% to 5% of the purchase price for closing costs. And then the down payment can be anywhere from 3.5% of the purchase price. And then if you're selling a home and you're using that equity to buy another one, that's where you start hearing about the 20 and 25% downs. But down payment, lowest 3.5%. If you're using a no down payment program, no savings is needed for a down payment. And then your closing costs, depending on how you negotiate that loan. Most folks have been successfully asking for the seller to offset some costs. So saving anywhere about 3% up to about 5% would be reasonable. But a lot of times sellers will help you offset your closing costs. What list do you need to buy a home? Now we're talking about financed properties. Obviously, it's a cash purchase. You just have to have a bank statement that's showing that you have the cash to purchase the home because the sellers will require it for their offer. For a financed property, you're going to need a checklist for a lender. Typically, they're going to ask for 2 months bank statements, 2 months paycheck stubs, 2 years tax returns, any accounts that you're going to use to apply towards your home purchase, like a retirement account, those type of things, an investment account if you're going to use it for the purpose of purchasing. And then, of course, you're going to run your credit. No lender can give you any quotes unless they fully review you. The new guidelines require that. If you're self-employed and you don't get paycheck stubs, do prepare to show your business expenses, 12 months, income and expense, those tax returns. They're going to need to show your proof of income since you don't get paycheck stubs. And some lenders may require 2 years of that. If you notice, these commonly asked questions are all over the place. And that's because a buyer situation is very specific. It's very different types of buyers that I've answered these questions on, and it's likely the same buyer to be doing two of the same things. So it's really important to have a consultation. If there's two big takeaways to have from all of this, is that time in the market beats timing the market. It's not about the price you're paying today, it's about your holding time and what's going to happen over the years to come. Remember, real estate is a long-term strategy, so you don't worry about the little micro changes happening in the market. You're going to hold for a period of time, pay down your debt so that you have equity. Then over time, with inflationary reasons alone, values change, and then that's really the benefit of real estate, your holding time of real estate. Secondly, these questions, like I mentioned, they're in all different perspectives. There's so many different specific types of buyers out there that you should have a consultation. Really dive into your specific circumstances so that a plan can be set. So set a buyer consultation with your agent to build a true plan that fits your specific needs.